Welcome everyone. Thanks for attending this session today. Obviously, as Andrew has pointed out, these are pretty unprecedented times, and we have a lot of clients, and I'm sure a lot of you also, that are going through some troubling times. And the key is obviously trying to survive this period. The presentation is on one of the largest stimulus packages, the JobKeeper payment regime, and it's intended to cover at least 6 million employees. So it is something that is likely to help some businesses stay in business over these troubling times. Just as an introduction, I'm Alexis Kokinos, a tax partner in our tax consulting group, and been heavily involved in the consultation process on stimulus measures, and we'll be involved over the next couple of weeks with discussions with ATO and Treasury on things that are upcoming. So this is moving very quickly, and hopefully we'll cover off on quite a number of issues that you may have while going through these provisions. It is a very detailed session. We go through the rules in detail. We make section references. It goes for an hour and a half. We'll use the whole hour and a half to go through this session. I do recommend sitting right through it, because towards the end we will go through some important integrity rules that you do absolutely need to be aware of as you work your way through these. So I'll click into the presentation. Hopefully this is all coming through. Now on the side you should be able to download the presentation, which should be available through the webinar, and inside the presentation we'll also provide some links into the rules and the explanatory statement to the rules. As I mentioned, I will be going through each of the sections and walking through those so you know exactly where I'm taking information from. Now we do have a disclaimer or important information. Please note that obviously what we're providing is general information. This is changing on a daily basis, all subject to interpretation. Obviously the ATO providing views over time. It's also limited in terms of how much information we can provide during a 1.5 hour session. So the key message is you do need to be as on top of these rules as possible. You do need to read through all of the Treasury and ATO documents. They're not long documents, but you do need to be on top of those as much as possible, as they are changing from day to day, and interpretations are changing, and they are quite critical in terms of what outcomes may be there for your clients and for yourselves. So jumping into the overview. So I'm sure everyone is aware of the regime. It is, as I mentioned, one of the biggest stimulus packages ever in the history that has been implemented by our government. It's a $130 billion package over a 6-month period. And it's going to apply to eligible employers. So it's payable to the employer and certain non-employer businesses, which we will cover, who meet a requisite decline in turnover test. And we'll go through those tests in quite a bit of detail. It will only be payable in respect of what we call an eligible employee. And once you establish eligibility for that employee, then the government will pay the employer $1,500 gross before tax per fortnight for the employee for every fortnight that you qualify. There are a whole host of notification requirements as well. And so you do need to meet those requirements throughout the process, and we'll touch on exactly those. ATO released quite a bit of information around the forms and other things yesterday, which we'll cover. If you are looking for where all of this is contained, there are 2 bills that were enacted and a set of rules that were brought into existence through a legislative instrument. The first act, which is the Coronavirus Economic Response Package, that provided the Treasurer with ability to make rules using legislative instrument, and then it contains some other administrative rules, such as if you claim it when you're not entitled to it, how you pay it back, some integrity rules around certain claims and what you might be liable for if you have claims that may be considered misleading or fraudulent, and record keeping requirements. There's another bill, which is the Coronavirus Economic Response Package Omnibus Measures Number 2 bill. That one included really important amendments to the Fair Work Act when you're under the JobKeeper rules. It is very important to understand those. They relax a lot of conditions for employers, as well as putting on civil liabilities to the employer where they don't pass on the JobKeeper payment by the end of the fortnight. So it's some really important liability provisions in there under the Fair Work Act when you're in the JobKeeper rules. Finally, and what we're going to cover today in detail is the Coronavirus Economic Response Package Rules, Payments and Benefits Rules 2020. They outline the eligibility of the provisions and how the provisions apply under JobKeeper payments. It does provide other powers to the Commissioner to provide for other legislative instruments that may extend certain aspects of rules, and the Treasurer can introduce further rules going forward as well. Now, these rules were only released on Thursday last week, 9th of April, so they're very new. They came with an explanatory statement which clarified a number of uncertainties when the draft rules were released. And the ATO have only put out their commentary as of yesterday. So their commentary is very new, where they've spoken and clarified about a number of items. They have yet to release information around the turnover test. So there's still a lot of uncertainty around the turnover test, and we'll cover a bit of that today. And once the ATO release that information, we definitely, there's a requirement there definitely to go back and check exactly what the ATO say around the turnover test. All I'm stressing here is that care needs to be taken for all advisors around this regime, especially around the penalty provisions and joint several liability that I'll cover later on, where other people can be liable for claims made by another party. So you've got to be very careful around these. You do need to check what the meaning is of certain things. You do need to check if things change over time because everything's new, and the ATO is going to release information on a piecemeal basis. So we're covering four main aspects today. The first, which is probably the most important, is eligibility for business entities, and that has most of the requirements under JobKeeper rules that we will cover. So how can a business become entitled to payment, and then how does it work? We'll then touch on the eligibility for self-employed. So if you do have a business and you're self-employed, or you're one of the business participants that are defined as being self-employed, then one of those parties can claim JobKeeper, and we'll go through the requirements for that. We'll touch on the integrity provisions and what you need to be aware of, and what I would say is the key action items at the end of this. So eligibility for businesses. So as a starting point, the first critical item is the payment periods that the JobKeeper regime will make payments to employers. Essentially, the way the regime works is it looks at a fortnight and it looks to make payments to employer on a fortnightly basis. Now, the regime has different rules for what we call the first two fortnights, and then slightly different rules for the remaining fortnights. So the very first fortnight under the regime is the first fortnight commencing after the 30th of March. So it falls on the 12th of April being the first fortnight. And then every fortnight thereafter until the 27th of September. So those are all of the fortnights within the provisions. There's 13 fortnights. And as I mentioned, there's some relaxing rules that occur for the first two fortnights in terms of some of the requirements to submit documentations, make payments make payments to employees, which I'll touch on and cover shortly. So how much is the payment? The payment that is made to an employer per employee is $1,500 per fortnight. If you get all 13 payments, the employer will receive $19,500. They'll receive that in cash. That will be the amount that the employer receives as a subsidy. So the Commissioner then has a requirement to make a payment to the employer after the month, but 14 days thereafter. So the Commissioner will pay that by for example, for April, we'll pay that by the 14th of May. Now, the ATO in their guidance have outlined that they are likely to try to pay that in the first week. In order to be entitled to that, the second point on that slide is you need to have made relevant payments to your employees and satisfied all the requirements for a fortnight. Now, there are some relaxing rules I've listed there in section 14 where the Commissioner may pay that if you haven't met the requirements or the payment requirements in the fortnight. I will touch on those slightly. They cover scenarios where you might pay on a different cycle, such as a monthly cycle, or if you've made an error after the event. So there are some relaxing rules, and I'll touch on those during the presentation. So as mentioned, it's quite a significant stimulus package. It's $19,500 per employee if you're entitled to it the full 6-month period. Just as an idea of how the payments will work, so for April, if you qualify for all of April, you should receive $3,000 in early May. And following on, that would occur for each of the months. The only month that has 3 payment cycles is September. So there will be a $4,500 payment potentially for September, and then October will end again with a $3,000 potential payment. So that's just a neat table, just showing the relevant dates again and the amounts of the payments. So getting into the detailed components of this. So in order to find out whether the employer is entitled to a payment, we turn to section 6 of the rules. And the rules contain a number of requirements, and they're outlined on this slide. There's 5 main requirements. Now you determine these requirements, or you need to determine these requirements at or before the end of each fortnight. So it needs to be determined at each fortnight period. But some of the requirements, if you satisfy them once, will be satisfied always going forward. So the first is the entity. So you identify an entity, who is the employer, needs to be eligible as an entity, an employment entity, on or before the end of the fortnight. And that's basically talking about the decline in turnover test when you go through eligibility requirements. It also requires you to test that the entity is not ineligible by being a certain type of entity. The second requirement is that the individual that you're looking to make a payment for is an eligible employee of the employer for the fortnight. And there's some tests to go through for that. The employer needs to satisfy the wage payment condition, so making $1,500 by a certain date, and we'll cover exactly the requirements for those. There are notification requirements that need to be done. That includes notifying employees and receiving notifications back from employees. And you need to provide certain information to the Commissioner in an approved form, which does include enrolling for the regime in a form, i.e. electing to be under JobKeeper, so submitting that form, and then also submitting information about the employees, the amount you're paying them, and also your monthly data on GST turnover. Again, we're going to go through each one of those items in some detail. So the very first test is the employer eligibility. Now, when we're looking at an entity or the employer, it's absolutely critical to understand that we're looking at an entity on an entity by entity basis. So every single entity is looked at separately. You look at each separate entity and look at if they are an employer and have eligible employees. You do not group any entity with other entities. So you don't have a holding company that's grouped with a subsidiary. You don't group GST groups. You don't group associates. You don't group affiliates or connected entities. It is separate entities that need to be looked at. If you have a tax consolidated group, you again do not look at that as a single group. Each entity in the tax consolidated group is treated as a separate entity. It is absolutely critical as one part that you have to identify the employer as a separate entity. So that is the entity that you're looking at. Once you've identified that employer, you then need to go through what I call 2 basic tests. So the first test is the employer, the entity, on the 1st of March, either carried on business in Australia at that point in time, or was a not-for-profit that pursues their objectives principally in Australia. That's the first test. And then the second test, you need to satisfy the decline in turnover test at or before the time. Now, the first test is obviously very critical in terms of whether the entity is carrying on a business. And that can be quite controversial. It could create uncertainty where the entity is an investment entity, receives trust distributions, has different types of things happening. And the ATO has provided rulings on whether you carry on a business or not. So it is a critical test that you need to prove as a starting point, that you need to carry on business in Australia. Secondly, though, even though you may carry on business, if you're an investment entity, you may not satisfy a decline in turnover test because it does look at certain items such as taxable supplies, etc. So there are some things that you need to look at more closely there for the type of entity. We're going to cover those again in a few slides. So those are 2 main tests you need to satisfy. There are 5 other items there that are covered in terms of eligibility, which we're hoping won't apply to a lot of our clients and a lot of the entities we look at. The first is that you can't have the major banking levy imposed on you or a subsidiary. So that's generally 5 entities in the whole of Australia, so it shouldn't hopefully apply to many of us. It can't be a government entity or a wholly owned subsidiary as such. So, for example, a government school would be out, being a government entity. And it can't be a sovereign entity. So those are some foreign government-owned entities that meet the sovereign entity test. It can't be an entity that has a liquidator or provisional liquidator appointed, and it can't be one that has a trustee in bankruptcy appointed. Now, one question you might see there is what happens if you have an administrator appointed? There doesn't seem to be a preclusion if you have an administrator appointed. Also, if you appointed a voluntary liquidator, could you switch back to being in administration, for example, and seek to get access to this? And it may be a possibility. There's been no guidance on that type of question.
Alexis, it's Andrew. You and I have chatted about this, but obviously the exemption for voluntary administrator would certainly make some sense. So we'll tease that out, but if anyone's got any specific questions, they're welcome to contact us on that.
Thank you, Andrew. That's great. Okay, so the critical and most important test here is the decline in turnover test. And this is where I think the most scrutiny will come from the ATO in terms of whether you are really eligible or that entity is really eligible for the JobKeeper payments. What it does is it's got a number of concepts. It looks at what we call the projected GST turnover during a relevant period, and it needs to fall short of the current GST turnover for a comparison period. And when you look at the amount that it falls short, it needs to equal or exceed a specified percentage for that applicable entity. So just high level, projected GST turnover is generally looking at the current turnover of the months of 2020. So whatever month or quarter or period we're looking at in 2020, that would be what we would use for projected GST turnover. Now that doesn't mean you're not going to pick up actual turnover, so I'll go through that definition in detail, but they use the word projected GST turnover for that purpose. Current GST turnover for a comparison period is looking at the same exact period 12 months earlier. So if we're looking at April for projected GST turnover, the current GST turnover period will be April of 2019. We'd get the dollars for each of those two, look at how much it falls short, if it does fall short, and the percentage needs to equal or exceed a specified percentage. Now those specified percentages are different depending on the type of entity you are or your turnover. So if the entity has an aggregated turnover of less than 1 billion, that threshold is 30%. You need to have your turnover decline by 30% or more. Aggregated turnover here is grouped turnover, so it would pick up your connected entities and affiliates for the purpose only of this aggregated turnover test. If your turnover is greater than 1 billion, then the threshold is 50%, and I would expect the majority of our clients wouldn't have turnover over that. So the majority would probably be in the 30% category. But if you have an ACNC registered charity, this threshold becomes 15%, irrespective of your turnover. Now, I just put a note there for ACNC registered charities, they do not include higher education providers or schools. Now, there's obviously a broader definition of what that is. So if you do have someone providing education, please have a look at that. They're excluded from the 15% threshold. So what is the period that you're testing? So generally what the rules say is you look at the fortnight, and you look at the fortnight and you see which periods that fortnight falls in. And it can fall in a monthly period or a quarterly period. So the legislation stipulates the following months as being monthly periods. It says any month ending after 30th of March. So it should be there, it says 30 March, which is a 31st of March, 30th of April, 31 May, 30 June, 31 July, 31 August, 30 September. All of those periods are months that will end after the 30th of March. So they are relevant periods that you can do your testing. Also, it stipulates quarters that are ending after that period, after 1 April, and they include both the 30 June quarter and 30 September quarter. Now, each and every one of those can be test periods, as long as your fortnight falls into that test period. So you look at the relevant fortnight you're testing, and then you see whether that falls into the period. Now, if I jump back and say, okay, what about the very first fortnight? The very first fortnight, which was Sunday, was the 12th of April, but it did commence on the 30th of March. So the fortnight covered was both in a period of the March month and was also in the April month, and it was also in the June quarter. So when testing eligibility, you're allowed to pick any of those 3 periods and test all 3 to see what your turnover is in terms of projected GST turnover, and also what the comparison would be. Now, on the left side there, I say an entity is able to test 2 periods for a fortnight, the relevant month or the relevant quarter. And I'll just highlight that that should be 3 periods in certain fortnights where the fortnight straddles 2 months. And I think on every single month, at the end of the month and the start of the next month, there is a fortnight that straddles. So you may get or may find that you get to 3 periods for each testing time. And I'll just go on back to this slide. It's not in your slides. I'll just move this here again just to show that, as you can see, when we're looking at the 12th and it started on the 30th, it has 2 days that were in March. And when we get to May and the first fortnight's the 10th, it will have pretty much all the way from 27th to the 30th of April in that fortnight. So it will straddle the period. So the fortnight ending the 10th of May, you'll be able to test the month of May, the month of April, and the quarter of June. Okay, so what is projected GST turnover? So that is a defined term. It's contained in section 188.20 of the GST Act. Now, I'll paraphrase what the test is here, but essentially what it says is your projected GST turnover at a time during a particular period is the sum of supplies that you have made, taxable and GST free, or are likely to make during that period. And the provision talks about the value of those supplies. So what is the value of those supplies that you've made? If we're looking for some guidance at the moment for that, we would turn to GST 2001/7, a GST ruling, which covers the meaning of GST turnover. Now, the ATO, as I mentioned, are yet to provide any comments on projected GST turnover and what they're going to expect or what they're going to be looking for. So all I'm going to do is just talk a bit about this ruling, what we're anticipating, and then obviously it's key to look at what the ATO come out with to see whether you need to adjust any of your things, any of your assessments based on the ATO's views here. So I've highlighted a couple of paragraphs in the ruling. The first one is paragraph 16. And what it says is you'll need to make an objective assessment on your turnover, and it's one that a reasonable person could be expected to arrive at having regard to the facts and circumstances which apply to your enterprise at the relevant time. The Commissioner will accept your assessment of these turnovers unless he has reason to believe that your assessment was not reasonable. Now, one of the questions that may pop up is what is reasonable in a period of COVID-19? How can we possibly have anything that's reasonable? However, it probably means that you do need to sit down and analyse that business and analyse what is expected and what is likely to occur and do an objective assessment. So by way of an example, if you have a construction business and you have a number of contracts that are on the go and there are delays in terms of providing services and expected delays on billings, there's also a drop-off on your sales or on new developments being picked up, you would be looking at projecting that through and doing a budget and doing an objective assessment of what you believe that would otherwise mean for the relevant period you're looking at. Same with any other business providing services or providing anything else. Again, you would look to monitor what is happening, what you're expected to be billing during that period, and doing a reasonable assessment. Now, if you can't come to a reasonable assessment, then you may not be able to establish that for a period. And again, when you move over to the next period or the next month, you may need to backwards look when you have that crossover fortnight. Paragraph 23 says the expressions likely to make and likely to be made mean that on the balance of probabilities, it can be predicted the supply is more likely than not to be made. So again, that's in itself not helpful because on the balance of probabilities, a lot of people may not know exactly what's happening. but you are to use, I guess, your best endeavours in trying to estimate what those might otherwise be. But finally, it talks about at paragraph 24, when a supply is made, is determined in each case by reference to the terms of the particular contract, if applicable, and the nature of the supply. The purpose of calculating supplies likely to be made will accept the calculation based on a bona fide business plan, accounting budget, or some other reasonable estimate. So, if the HO sticks to this and you go through the process of estimating the turnover for your clients, and you do that in good faith, and there is reasonable scrutiny around all of the actions that you're doing in terms of how you're doing the budgeting process, one would hope that you would be able to rely on this ruling and what's being said in the ruling. Again, subject to what the HO comes out with. Now, all I stress is caution here. For example, assume that a client delays its billing for the period of April and decides to bill all of those in May. So there's a massive drop-off in April, but there's relatively no drop-off in May. The HO is going to get monthly data of all your GST turnover, which you need to submit as part of the JobKeeper plan, and we'll see the relevant movements. And note that there's been a decline and then an increase in the following periods. They may then ask for further information and then may make an assessment that they don't believe that your original estimate was bona fide or reasonable in the circumstances. They may therefore question whether you're entitled to the JobKeeper plan from the start, which can create other obligations. So it is critical to ensure that there's appropriate scrutiny and that appropriate calculations are done around GST turnover, because it is something the HO will receive information on and are very likely to look at in the future. So just to go through a basic example, so we've got Bisco carries on a business and employs 100 staff. On 11th of April 2020, Bisco makes an estimate of its projected GST turnover. Now, obviously, the dates here were the last week, but we'll use this just for practical purposes. So here we've got the months of April, May and June, and assume that there was no effective change in March, and I haven't used the March data at all here because it didn't show anything. So we've got here in this table the 2019 actuals, the actual taxable supplies that they made, what they're estimating for 2020, and then after the fact, I've listed the actual turnovers as well for 2020. So for April last year, they made 2.5 million of sales. 2020, they estimate 2.3. They end up actually making 2.4. So how does it work in this case? So we're going to use two periods in this case as test periods. We're going to choose April, and we're going to choose the quarter ending 30 June. So we've got projected turnover for April. We've got an estimate picking up what's already happened and what's likely to happen for the rest of the month. We're picking up a figure of 2.3 million. And then we're looking at the quarter and we're picking up a figure of 6.2 million as our projected turnover for the quarter. When we look at that, our projected decline as compared to the prior period in both those is 8% and 32.6%. So we're comparing 2.3 million to 2.5 million and 6.2 million to 9.2 million. So if we're looking at the projected quarter where we've exceeded that 30% by a small margin, we're at 32.6. Then we have a look at the actual, and the actuals only declined by 28.26, so it's not above the 30% threshold test. So where do we sit? Where do we sit here? So again, if I go back to the HO's ruling, if our budget or our estimated or projected turnover can meet the scrutiny of that ruling, then we hopefully should be able to rely on that. And that small difference there can be explained by different changes in circumstances. But if we've done a bona fide estimate, then in this case, hopefully the HO will stand by what it's got in this ruling. Now, if that was substantially different, the HO might say that the projected quarter turnover wasn't based on reasonable estimates, or we didn't have sufficient information, or it is something that we probably shouldn't have relied on. And when we're in those cases, then it may be difficult to be able to use the June quarter estimate unless we are comfortable or confident that they would be a reasonable estimate. Again, the ATO will provide further comments on this, but in that case, you'll see that if we were, for example, had an actual decline of only 25%, you could see the ATO could turn around and scrutinise our figures and say whether we, or argue that we may not have been entitled to the JobKeeper. The original Treasury documents did talk about slightly getting it wrong, and where you've acted in good faith. And again, we believe those are consistent with the ruling comments. Now, you'll probably notice in this example here that we weren't using reporting cycles, we weren't using cash flow accruals or anything like that. We were actually just using what were the supplies that were made in those relevant periods. So it does require you to go back and check exactly what was done for those periods. Now, I'm just going to go back onto GST turnover. Just a couple of comments I want to make. I'm just on the slide that was before this one. And just going to highlight that when doing the GST turnover, the thing that that is probably going to be fairly tricky for a number of clients is exactly how they've treated certain supplies. GST turnover, as I've mentioned, there includes taxable and GST-free supplies. Now, when you go to a BAS statement, sometimes GST-free supplies are excluded. They're not put through the BAS, they're just completely left out. Or they may be classified as something else, or not highlighted appropriately. Sometimes input tax supplies are classified as different things as well. So one thing is it's going to be critical to review exactly how people have treated things and if they've got the right classifications in the data that you're looking at from a historical context and for a current context. There are also some special rules in Division 188 that exclude things from turnover. For example, if you have a capital asset transfer, Section 188.25 excludes those from GST turnover. So you need to work through your 188 amendments as well to make sure that you've picked up the special treatments for different types of things. Also in the rules, there are adjustments made, which are contained in the rules. There's adjustments for gifts if you're a DGR, or certain gifts and donations where you're an ACNC non-DGR entity. They are included in your turnover period. So gifts and donations can be included for certain types of entities that are ACNC or DGR type entities. Adjustments are made also to definitions so that the periods, when it refers to months and other periods in those sections 188.20, they are just looking at the period being tested for these provisions. So there's a number of adjustments that are made that you need to be familiar with. Those adjustments are contained in the rules. So having gone through what they call the basic test in the rules, there is an additional test that is contained in the rules. And essentially that is a commissioner's discretion. So the commissioner may, by legislative instrument, determine that an alternative decline in turnover test applies to a class of entities if the commissioner is satisfied that there is not an appropriate relevant comparison period. So just some comments on this discretion. It's not an entity by entity discretion. You can't go to the commissioner and say, look, can I please do something different in this because it's not representative. So starting point, you can't apply it to the commissioner. He has to issue a legislative instrument for this to apply, and it needs to apply to a class of entities. And there's another limitation there saying that the comparison period must not be appropriate for that class for him to issue a legislative instrument. So it's a very limited discretion. So what does that mean? Well, we're going to see a legislative instrument either this week or next week being released that are going to cover certain types of businesses. The ones that we think that are going to be covered because they've already been identified by Treasury and ATO in documents that have been released are classes being startup entities, cyclical businesses, variable turnover businesses, ones that have acquired other businesses. So to provide an example, if you're a startup business and you started in December, obviously you don't have a comparison period for the prior year. If you're a cyclical business and you have different changes in your cycle, then the prior year may not be relevant. If you acquired a business in October last year and your turnover is up because of that acquisition, then your prior year turnover may not be, again, a comparison. Or if you've divested, again, depending on the net change in your business, it may not be a relevant comparison period. Now, this is a helpful turnover test, so it doesn't take away the basic test. This adds new tests if you don't meet the basic test. Now, on that list there, I said it may include service entities, and I will touch on service entities a little bit later too. So I've got a couple of questions that I'm going to go through, and we've received a couple of questions which I'll touch on as well that have been flagged for me to talk to. I know there's a heap of questions coming through, and the team are trying to respond to your questions. Unfortunately, literally hundreds of questions are coming through. So we're unfortunately not probably going to be able to get to all of the questions. What we might try to do is release a FAQ after this, sometime after, that might hopefully address most of the questions that have been raised. But here are some quick questions that are typical ones, and then some ones that have been flagged for me to talk to. The first question was, the first fortnight ended on Sunday that has just passed. Can eligibility tests be satisfied for the first fortnight? The answer to that question is yes. It was uncertain last week, but the ATO have come out with documentation yesterday that suggests they're going to provide 3 types of extensions to allow eligibility to be satisfied. So they're going to extend 3 things till the end of the month for taxpayers, which is the enrolment process, the notifications to employees, and the payment rule. So it is possible. Prior to that coming out from the ATO, we were uncertain about that. If you satisfy the turnover test in one period, is it satisfied for all future periods? The answer to that is yes. You just need to satisfy the turnover test in one single period, and from that point onwards, you satisfy that going forward. You can't backwards satisfy, so you can't satisfy this in the first week of May and seek to apply it backwards. But if you satisfy it in the first fortnight of May, then for each fortnight thereafter, you are deemed to satisfy the turnover test. If you don't satisfy turnover, can you keep using the same period each fortnight? So for example, if I didn't satisfy the June quarter at the start of April, but by the time I get to the first fortnight in May, my projections suggest that the June quarter now has dropped so that I'm exceeding the 30% test, then the answer is yes, you keep testing the periods until the end of that period. So you can test June 6 times in the June quarter, 6 times in the June quarter. So 3 other questions that have come through. Just the first one, I'm just going to read it. If your turnover did not decrease from 2019, but there's been a drop of 50% since a prior month, will you satisfy the turnover test? So in this case, the answer is probably no. The comparison period can't be a prior month. It needs to be a 12-month period prior. So it would then come down to whether you fall into the Commissioner's discretion in that case, if you fall into one of those alternative classes and the legislative instrument that is yet to be released. Another question, which is a common question, what happens if I use a service entity that employs everyone? This is a really tricky one, and we have made a submission on this issue. So unfortunately, a service entity is treated separately and looked at separately. So if that service entity was charging other entities in the group and it's done on a cost plus pay basis and you kept employing everyone so your cost didn't change, then unfortunately, you're probably not going to have a decline in turnover, which leaves you in a bit of a catch-22. You probably need to then reduce the employment activities to get a decline of your costs in order to get to the lower threshold, or you may need to agree to a lower fee that is charged to other entities. Now, I'm going to state this, that you need to be very careful that those are not considered activities that are done in order to obtain entitlement to JobKeeper. And so it could breach an integrity rule if you did either of those 2 things for the sole purpose of, or dominant purpose of, obtaining JobKeeper. And I'll touch on that a little bit later. We are going back to the ATO to seek some clarity on this issue, to say that if you decrease your charge by a similar proportion to the turnover decline of the other business, would the ATO agree that that's not for a sole dominant purpose? So I will touch on the integrity rule. It's a very important one for this test. Another question, so very similar, just if you've got intragroup charges, what if it reflects, if you make a change to that for the service entity, what if it reflects commercial outcomes? What happens if I don't have an agreement with related parties? So in that case, again, I'm just saying that you just need to be careful about the integrity provisions if you start manipulating your turnover for any reason. Okay, so that's the eligible employer test. The next test is, what is an eligible employee? So once you found that you are eligible as a business, you then look at which employees you can get JobKeeper. So to start off with, it's only for eligible employees that meet these requirements. The first is they need to be employed at any time during the fortnight. So if they're employed at least one day during that fortnight, then they are eligible, potentially eligible. They need to have been employed by the employer as at 1st of March 2020. Now, there is a fringe issue there in terms of what happens if you sign the contract on the 28th of Feb and you started work straight after the weekend, which I think was the 2nd or 3rd of March. And that would come down to what is the interpretation of being employed as at 1 March. The third item is they need to be at least 16 as at 1st of March. So if they turn 16 on the 15th of April, they do not qualify for JobKeeper. They need to be full-time, part-time, or a long-term casual employee. So in terms of the definition of, so it doesn't really refer to what we call full-time or full-time or part-time in the definition. It only refers to employees that are employed other than casual, and then casuals are only long-term casuals. Now I'm just picking up the actual words of the legislation. So the actual words in terms of being a long-term casual is, at the time they need to be a casual employee and they've been employed by the entity on a regular and systematic basis during the 12 months that ended at the relevant time. So this has caused a bit of I guess opposition in terms of this definition, because it's some people hold this to be quite restrictive, especially if you had casuals that have just started prior to 1 March. Unfortunately, what the government have come out with is they've taken the definition that's used in the Fair Work Act, and that's the exact definition that they're following, and they're restricting it to that. So you do need to have them employed for 12 months, and they do need to have been employed on a regular and systematic basis for them to be covered. So out of this, a lot of casual employees will miss out on JobKeeper, but they will need to seek alternatives. Now, number 5 is they essentially need to be what we would say is an Australian citizen or a certain visa holder who are Australian residents. The visas are generally covering the 444 visa. We understand the 182 visas may potentially be covered. It is something that the ATO provide links to, especially around trying to determine which visas may comply with these rules and which may be covered by the rules. So there is a requirement around residency or visa holders that you do need to be mindful of, and that if you do have any of your employees on that, that is something you should be checking specifically in terms of their entitlement when they're looking to claim this. If you have paid parental leave, which is item 6 there, paid parental leave, it can't overlap with this regime, and you can't have it you can't be paying a dad and partner pay at the same time too. So basically saying you only get access to one of the regimes. If the employee is receiving workers' compensation, essentially they can't be totally incapacitated, so they must be still partly working for them to receive JobKeeper. Finally, and the most important, is the individual has to give a nomination notice to the employee, to the employer. So that is them saying that they meet all these requirements and they wish this employer to claim this entitlement. The reason that last part's important is they may not be eligible, so they're signing a document saying that they meet the requirements. And also they may have multiple jobs, and they may choose another job for them to receive JobKeeper. So they get to choose which one they may receive it. It's a little bit different for casuals, because casuals can't, essentially there's a limitation where they have another full-time job. They can't they can't choose it with respect to their casual job. So there are some limitations. You've got to be mindful of some of the nomination requirements that which are contained in the rules, but it does require the individual to provide that nomination. Now, the one thing that is important there is when you go to the penalty provisions on overpayment, there is a joint and several liability rule, and the employee can be jointly and severally liable for the payments being made back to the government if they've put a false claim in to the employer. So there are mechanisms where the government can collect directly back from the employee the amounts of money paid. So those things, when you identify the regime to the employees, those are things that are critical to highlight to them in terms of when they're making a nomination back to the employer. Okay, so you've identified a number of eligible employees. So the next step is, what is the wage payment condition? So that's contained in section 10 of the rules, and essentially it says that you need to make a payment of amounts or sum of amounts, and they need to equal or exceed $1,500 during the fortnight. Now they're very specific. There's 4 items. The first item is that you need to have salary, wages, commissions, bonuses, allowances paid in the fortnight. So you need to pay an amount, and you're allowed to count that. This is the net cash that goes to the person and that you have paid to that person in that fortnight. Now, there are some modifications to that rule in terms of timing. The Commission has an ability, there's an ability if you pay on a different period that you can reallocate the amounts. And then the Commissioner can also exercise discretion to reallocate amounts. And I'll talk to that aspect a little bit more when I talk about how April is going to be treated. But for all periods, generally speaking, you're supposed to have paid amounts in the fortnight to count it for the fortnight. Then if you withhold amounts in respect of those and you make that withholding payment, you're allowed to count that amount too. So obviously we don't pay PAYGW payments at that point in time, we pay them in our BAS, but you're allowed to still count those when doing the $1,500 test, even though they haven't been paid yet. You can include your salary sacrifice superannuation amounts. And then you can include other amounts applied in the fortnight by agreement, which includes benefits that are otherwise applied where you would reduce your salary for those payments. So it will include, or we believe in terms of what they're intending to include, is if you have fringe benefits and you salary package those and reduce your salary by that amount, the value of that fringe benefit reduction would also be included if that's been provided during the fortnight. So an example to demonstrate, to say the following amounts are paid in respect of an employee. We have the employees paid $1,200 in cash before the end of the fortnight. The employer withholds $260 of PAYGW in respect of that wage payment. That coincides with the withholding rules, and that's the correct amount that has been withheld, paid later on the BAS statement. They make a salary sacrifice payment for the fortnight equal to $90. And they reduced their salary by $50 during that fortnight in relation to fringe benefits. So if we looked at all of those items, we would add them up, and for that fortnight, we would have $1,600 being an amount greater than $1,500, and accordingly, that would mean you satisfy the wage payment condition for that employee for that fortnight. Now, the provisions talk about having entitlement and having made those payments. I will refer everyone to section 789 GD of the Fair Work Act. There's an amendment made in there that says if you don't pay the amounts by the end of the fortnight or with respect to the fortnight and in the appropriate time, then there's a civil liability that can be imposed on the employer. Now, what that means is that you may not be eligible to receive the subsidy, but you still may have a legal requirement to pay that to the employee, where there's a civil liability against the employer. So it is crucial that if you are in the regime, that you are making the appropriate payments at the relevant times to the employees. Now that can create a funding issue, which I will touch on. So just some questions that I'm going to address. So does payment strictly need to be made by the end of the fortnight? The answer to that is absolutely. You do need to make payments by the end of the fortnight if you're paying the net cash payment to the employee. Now, As I mentioned, if you pay monthly, then you may have an exception. The way the words are drafted is if there is a regular period which the employer would usually pay employees in relation to the performance of work, and that period's longer than a fortnight, then the payments can be allocated on a reasonable manner. Now, it does require a regular period that you usually pay employees. So I've had questions raised as whether I can change weekly to monthly and then pay them the very last day of the month. Our preliminary view on that, without getting ATO views, is that the payment period would not be what you regularly pay people or usually pay employees in relation to the performance of work. So by changing the cycle, you're unlikely to satisfy the apportionment rule based on what the words are in the legislation. So there is an ability to reallocate if it is a regular period that you usually pay employees. There's also a commissioner's discretion where they can treat subsequent payments to have been paid at an earlier time. The examples cover where you've made an error. You can seek to have that discretion applied. Generally speaking, though, you need to make the payments within a fortnight. The ATO's documentation that came out yesterday provided an exception for the first 2 fortnights. It's allowing people to pay amounts by the end of the month. So before the end of the month, you need to have paid the full $1,500 to the employee. So the Commissioner is giving some time for you to work this out and make sure the payments are happening for that first month by the end of the month. And that can qualify for the first 2 fortnights. That's the only exception being made so far in the document from the ATO. So what happens if the sum of payments equals 1,499? Then technically, your $1 out, you get 0 from the subsidy. As I mentioned, there's an example in the explanatory statement that covers a small error such as that, and then you subsequently fix it, and then hopefully the Commissioner will exercise discretion with respect to that payment. But you need to have a minimum of $1,500 paid to the employee. If the payment comprises wages, why is there an SGC obligation? That's a good question there. That would be because at the moment there may be an obligation. However, the rules, the explanatory statement to the rules and the ATO commentary that's come out says there's going to be a legislative change to ensure that SGC is not paid on any excess JobKeeper payments. So if you normally would pay $1,300 a fortnight to the employee, you need to top it up by $200 to make it to $1,500, then that extra $200 should not comprise, you would not need to pay superannuation guarantee amounts with respect to that. Is there going to be a parity or work cover liability on the payment? A number of the states have come out, provided some exceptions for payroll tax. I'm unsure about work cover in terms of whether that's going to be covered too, but that's a watch this space in terms of where that excess component may result in additional liabilities. There are just some other additional items that could be relevant. So if just say you're paying your normal cycle, you are paying casuals or other employees only $200 a week, and you need to up them to $750. How do you fund that? Yes, well, the issue here is you do need to have made that payment of $750 per week or $1,500 per fortnight for that employee, which means you need to fund it first, and you won't get a subsidy back until the first week in the following month, or within 14 days after the following month. So you could have a whole month where you need to fund that salary and wage. The Treasury document says that you should be looking for alternative finance mechanisms. They refer to some banks being potentially able to fund on a security basis, a security over JobKeeper payments. At this stage, I haven't seen banks come out explicitly with those, but those are things that employers would need to understand, that they need to fund this and need to physically have paid the cash to the employees prior to getting the subsidy back. The ATO come out explicitly yesterday in the document saying you cannot receive JobKeeper before you have paid employees. What if I've paid monthly? I think we've covered the monthly payment. If you ordinarily pay monthly, then you should be able to allocate the monthly payment to 2 fortnights or 3 fortnights if it's the case. And the other question was, can I change payment cycles, which I think we've covered. I think there's got to be a bit of caution around changing payment cycles because it may not be your regular payment method, so you might not fall into the allocation rules. Okay, so then we've got our last 2 tests that we were covering, that we were on the table earlier, the notification requirements. So there's basically 5 notification requirements contain the rules, and I've stipulated some dates here, but the HO come out yesterday and changed a few of those. So the first requirement, which is really an election to participate, that's requirement, it's listed number 3 there on the list. The employer needs to notify the commissioner that they elect to participate in the scheme. Now, the legislation said the rule said 26th of April 2020, that's contained in Rule 6.2, but the HO came out yesterday saying that they will extend that to 30th of April. So it could be extended, and they have extended that, to that date. They're saying that they're going to open up the portal to put that notification anytime after 20th of April. So once you've had the entitlements paid, you need to notify, so item 1 there, notify the commissioner of the employee entitlements. You need to notify the commissioner about each employee's entitlement for the fortnight. Now, the Treasury document said that's likely to be through STP. HO came out yesterday and clarified that if you are on STP, you will need to be reporting the payments that you're making through STP to those employees and need to be submitting that report to the HO. Now, if the certain taxpayers, there's some micros that are still not on STP, there is a solution for those. There's going to be a form where you can put the data on that form and lodge that through the portal as well. So there will be a solution for everyone, but that's how it will be reported to the ATO in terms of what you are actually paying the employees. Item number 2 is there. Within 7 days, then you need to notify each employee in writing of their entitlement. So that's got it. So once you've done the pay slip within 7 days of notifying the commissioner, you need to tell the employee that you've notified the commissioner and give those details to the employer. Item number 4 there is if you don't apply in the first month and apply for any other fortnight, you need to apply by the end of the relevant fortnight. So if we're looking at May, you would need to then apply and make the election to apply for the regime by the end of that first fortnight if you're looking to get a payment for that fortnight. Once you're in the regime, then each month you need to report GST turnover for the actual month and the projected turnover for the following month. So if we're looking at April and you claim it for April, you need to report April's turnover and your projected May turnover. And that's done month by month for the whole 6 months if you were in the regime for 6 months. And you need to provide that data to the HO within 7 days. So the key important part here is that your projected turnover, if clients are in this regime, they need to be budgeting each month by month. And there's obviously going to be a comparison of what your budget is to actual. So in April, you'll be budgeting for May, and in May, you'll be reporting your May. And you'll be then budgeting for June, and in June, you'll be also reporting your actual and submitting that to the ATO. So that is a requirement under this regime to submit that data to the ATO. The ATO website has put up some very important information. I would recommend thoroughly reading the ATO's document. It isn't a long document, but it does go through some important steps. It goes through an 8-step process for registering and about an 8-step process for claiming the entitlements. I'm going to quickly touch on those processes. We've covered a lot of the detail already. You would start off by registering your interest on the ATO website. If you put your ABN in there and your details, you will get emails when things change. You need to check your employees will meet eligibility requirements. So the first onus is on you to check what their status is and whether they meet requirements. For example, are they older than 16 at a certain time? Are they Australian resident? The information that you should otherwise have, are they casual, full-time, etc. So you should be looking at what are their requirements, who could be potentially eligible. Then you need to notify the eligible employees of the intention to claim JobKeeper. So there's a notification that goes out to every single employee that would be otherwise eligible, saying to them that you're looking to claim JobKeeper payments. You send that nomination notice to all employees, and they need to return that by the end of April. So there's one of the extensions, they need to return it by the end of April in order for them to be for you to be able to claim that JobKeeper. There's no extension on that. That generally would have been an earlier time. That's been extended to the end of April. For all other fortnights, it is extended only to the end of the fortnight. The ATO recommend that the registered tax agent keep a copy of all those nomination notices on file, so in case the ATO come and ask for it, you have a copy of that. From the 20th of April, you can enrol on the business portal. You can enrol through all the electronic media that they have in terms of the agent portal or online services. But that needs to be done before the end of the month for April, and then end of every fortnight for thereafter if you're using it in a different fortnight. In the online form, you need to provide your bank details. And before you start claiming this, you need to estimate how many employees you think you're going to claim it for. If it's in April, you do highlight which is the first and second payment and how many employees you believe will be eligible. That's just the registration process. So once you're in the process, then after April, you'll need to submit a document outlining what your eligible employees are and what your claim otherwise would be. So you'll apply to claim the JobKeeper payment, again, logging in through the portal or online services. There's an application form. You've got to ensure you've met the wage payment conditions that we went through. You've paid the amounts to the employees. You identify eligible employees in the application form. So you identify exactly who those employees are, and you submit the STP reports or provide the manual reports to the HR on that online service. Once you submit that, the confirmation of eligible employees, you'll receive an SMS back from the HR. So if you don't receive that SMS, they may not have received the documentation. So you should ensure once you've submitted those things, you get back an SMS. You would then notify your eligible employees you've nominated them as well. The HR will then pay the employee the JobKeeper payment after receiving all the application, generally within 14 days of the end of the month, but the HR is saying it should be within the first week. And at the end of that, you would also reconfirm that your eligible employees haven't changed. If they have changed, you need to let the HR know who is no longer an employee and what the changes are. It's quite a lengthy process to go through there. The HR highlight that this is something that that tax agents will need to assist their clients through as a process, as well as assisting them with all of their calculations and other things during the process. As I mentioned, that this is an ongoing regime, and that you test eligibility each fortnight. At the end of each fortnight, you can keep testing this all the way through. If you start meeting requirements in June, you can register in June. You can start submitting applications in June and start receiving payments. So this is an ongoing process. This is not just a April process. So the number of clients that you have or entities that you're looking at, they may not meet these requirements. It's risky to ascertain that in April, but through the process you will come to a conclusion that you may meet these. So over time you may get there, and you may need to follow all these processes on an ongoing basis. Okay, so that takes me to the end of just the employer section. I'm going to cover the extended part of the regime, which is eligibility for business participants, or what we call the self-employed parties. So essentially, this is dealing with those that are actively involved in the business but aren't employees and aren't getting paid a wage. General examples could be directors, beneficiaries of a trust, shareholders of a company, where you're not paying them a wage, you're paying them other types of income. So Section 11 covers the additional requirements for these business participants. And basically, they're exactly the same as the requirements for an employer that we went through earlier. They're almost identical, except they just change a few terms, but they add on a number of additional requirements. The first one is you can't be a non-profit body to get access to this rule. The individual needs to be an eligible business participant for the fortnight. That's a defined term. We'll just cover who is one. You can only nominate one business participant, so that individual needs to be nominated and needs to be the only one. That individual can't get JobKeeper from anywhere else. So they can't be employed by another entity and get JobKeeper, is the fifth condition. There's a income requirement such that the business needs to have income in the 2019 income year, or it needs to have made a taxable supply from a period of 2018 to the 12th of March to meet this requirement. So it basically says you can't just start a business now and start seeking JobKeeper. And finally, you need to have an ABN as at the 12th of March 2020, or further time. If you haven't got an ABN at that time, the Commissioner can give you some extra time to get an ABN. So there's a number of requirements there that you need to satisfy if you're going to claim this for a business participant, and things that you should be looking at for those businesses that have business participants in them. So what is a business participant? It depends on the type of entity. For a sole trader, it is the sole trader. They are the party that can claim it. If you have a partnership, it is a partner in that partnership. And that partner, it can only be one nominated. So if you have a partnership of 10 partners, it will only be one party. Trust, it needs to be an adult beneficiary. And for a company, it can be the shareholder or director. So I'll stress again, the individual must not be an employee of the business, and it needs to be actively engaged in the business carried on by the entity. So if you have a director that isn't really involved in the business and is director by name only, then unlikely to be covered. It must meet all other requirements of being an eligible employee. So all the stuff we went through on eligible employee, generally speaking, it needs to meet all of those other requirements as well. These are all stipulated in section 12, and I'm not going to repeat through all those eligibility requirements because they're copied and pasted basically from the eligible employee test. So just some quick questions. Can the relevant entity qualify if it has employees? Absolutely. You can have a business. It might have 15 employees that you claim JobKeeper for, and it might have one director that isn't paid a wage, and you can claim the JobKeeper for that nominated director if they're actively involved in the business. So who receives the $1,500 in respect of a business participant? So the rules are drafted in a funny way here. They say the entity receives the payment. So if you had a company and you're choosing a shareholder, the way the rules read is the company will receive the $1,500 and it will be accessible to the company. We have highlighted to the ATO and Treasury already that when you on-pay that to the individual, that could create Division 7A issues, could create other issues, could be a deemed dividend. So we're seeking some clarity on there. There's no requirement to on-pass that amount, but it would defeat the purpose if you had to leave that in the entity. So we're seeking some clarification. There is an ability to treat an amount as being exempt income or name income, and we're asking whether that should be the case for a business participant in those circumstances. So the question here, is there a requirement to pay the $1,500 to the business participant? No, there's no requirements. It's different to the eligible employee requirement. The entity can keep the money within the entity. And that's again on the drafting of the rules, and so far we haven't seen much from the HL on this part. So if the entity company receives a payment pays to an individual, how to be treated to both parties. If that individual is a shareholder, yes, as I mentioned, Division 7A could potentially apply to that. I had a couple other questions here, but I think we've addressed them. One of them was an interesting one. So, you know, the 5 independent partners in a partnership, can they all claim? The answer was no to that. Another interesting one is if a discretionary trust owns a unit trust and the unit trust carries on the business, can you get JobKeeper? In that structure, I think unfortunately the answer is no. The unit trust carries on the business. It needs to have an adult beneficiary to claim it. If the unit holder is a discretionary trust, unfortunately the beneficiaries of that business trust is another trust, and technically you don't get the requirements there. So I think unit trusts, be very careful. If they're not owned by individuals, or at least one individual, I think you're going to miss out. I don't think you can have a director of the trust. I don't think a director of the trustee company is going to qualify either. So just be mindful that you may miss out on those types of that type of structures. Adult beneficiary requirement for a unit for a trust. Okay, so integrity measures, and this is probably a critical area for all of us advising in this space. As I start off the presentation, this is a $130 billion package expected to pay the salary and wages of 6 million, or subsidise the payment of salary and wages for 6 million employees. So a massive stimulus package. However, there is absolute room for people to be fraudulent around this and to do activities which could cost the government more than double that amount. So they have armed these provisions with some significant integrity provisions, and they have outlined them in the explanatory memorandum to the bill, which is now the Act that I've listed there, the Coronavirus Economic Response Package Payments and Benefits Act 2020. I'm going to touch on these. Please be very mindful of these provisions when looking at your clients, and also when you're looking at adjusting or doing any activities that would make them qualify. The first is an overpayments debt rule. So if you receive JobKeeper and you technically didn't satisfy the requirements, there is no discretion here. You need to pay the amount back, and you need to pay general interest charge back on those payments. So you need to be very careful. You need to ensure that you did qualify for the amounts. If there was an entity that made a statement that's false or misleading, or fraud, or if it's due to fraud of another entity, then there's a joint and several liability requirement there that they can seek to claim back the overpayment debt from another party who made that false or misleading statement, or if it was due to fraud of that other entity. Now, the example they give is an employee provides false statements of their eligibility, and therefore you can seek that they can seek to claim it back from the employee rather than the employer. Now, I highlight that this is not limited. A tax agent could put false information in on the claim, or false or misleading information in on the claim, and I would expect that they could seek to apply this against the tax agent. There could be fraudulent claims made or activities done which was assisted by a tax agent. Again, I believe that these are broad enough to potentially apply to that. So you could see the ATO making claims against other parties where they've done things where they haven't taken due care around the process. There's a record keeping requirement in the bill. It's predominantly deals with pre and post payment information requirements. You need to retain your records essentially for 5 years is the gist of section 14 of that Act. There's a contrived schemes provision. So basically it says if the scheme's entered into for a sole dominant purpose of being entitled to payment or increasing your entitlement to the payment, then you are not entitled to the payment. So if you do anything and that is being done so you can receive JobKeeper, then essentially you're not going to get the payment. So an example was adjusting a intra-group arrangement by 30% so you can get JobKeeper, even though you can't justify any other reason for dropping it by 30%. You could fall into the contrived scheme provision. You could therefore have overpayment debts, and then you could have also joint and several liability debts. So something to be very careful on and very mindful for. In addition to that, false or misleading statements, there's a financial penalty of 75% of the amount of overpayment, and there's potential imprisonment up to 12 months and a fine up to 50 penalty units, so 250 penalty units. I think they're about 180 each penalty unit. I'm not quite sure exactly the amount, but they are quite substantial in terms of penalty units too. If you fail to comply with a tax law, which includes this, again, potential imprisonment of up to 12 months and a fine of 50 penalty units and 250 penalty units for corporate entities. If you obtain financial advantage by deception, it can be imprisonment for up to 10 years under the criminal code. Conspiracy to defraud, imprisonment up to 10 years under the criminal code, and obtaining financial advantage can give imprisonment for up to 12 months. I've mentioned I've copied and pasted this out of the explanatory memorandum. They have highlighted that this is absolutely where they will go, where people have made claims that could meet these criteria. So I will stress again, be very mindful and be very careful around arrangements to seek to access JobKeeper when they otherwise shouldn't be seeking JobKeeper. Okay, so what are key action items from here? So I know that's a lot of detail. This session has been recorded. I understand that the recording session will be sent through to you, so you can revisit this. And there's a lot of information that can be obtained. The two documents I would highly recommend reading through is the explanatory statement, which is about 20 odd pages from the Treasury, which covers exactly how the rules operate. And then the ATO guidance, if you download the document, it's about 20 something pages again, and it provides a lot of information about all the steps that you should be doing. At a high level, I'll highlight some steps. I'm not going to cover everything, but at least you should be understanding the payroll system of your clients and how payments are going to be processed and how you're going to be able to report those to the ATO. I understand Xero, MYOB are creating STP enabled reports to be able to comply with JobKeeper. So hopefully if most clients are on those, you should be able to generate a report. It is pretty critical that you're ensuring the appropriate classifications in those so that you are switching things around so you're able to report under those. So please look out for those software packages and what they're offering around JobKeeper. You need to understand when you might be in a position to deal with April. So obviously the registration process 20th of April, need data or need to make nominations elections by 30th of April. Doesn't leave a lot of time. We're in the 15th of April already. So you should be talking to clients, trying to work out if you are going to be in a position to work out your eligibility for this month. If not, then you may need to move into the following month if you're not comfortable with April. So it is pretty critical understanding when your clients will have relevant information, when can you deal with that information. You should be looking to obtain GST turnover calculations for comparison periods and reviewing those calculations. So what have they done in the months of March, April, May, and June, looking at what they've included in their BAS, breaking those down, and then actually looking at all the items that weren't included in the BAS and the classification of those items. You can get detailed reports of GST from MYOB and Xero, and you can review those to check what the classifications are to see if those report amounts are accurate. You should be putting together appropriate budgets, projected GST turnover if you haven't satisfied it for March already. So for April and onwards periods, you need to do projected turnover. Make sure your budgets are acceptable from the ruling perspective. So it's quite important to check over that and scrutinise your budgets. Going through the tests for employer entities, make sure that they are eligible employers. Make sure you've ticked off all the requirements. Do they carry on a business? Have you made sure they're carrying on a business? Have you made sure some of the exclusions don't apply to them? So just make sure you go through all of the tests so you don't slip up on an eligibility requirement. Understand what your funding requirement is. So if you have 200 employees and they have all been stood down and you need to make an excess payment of $1,500 and you need to fund that amount every fortnight and will not receive payment until the following month, you need to understand what those dollars would look like and how you're going to seek funding and how that might impact on the business as well. The regime is an elective regime. You can elect out of the regime. So if the funding issue becomes too hard, you can elect out and you don't have to be in the regime. But it's critical to understand what your funding is. There's documentation and nominations that have to be completed by a certain date. So please make sure you understand what those documents are, what the nominations are. Make sure you complete them. Make sure you submit them to the HO on the portal as and when required by the due date. You miss them by a certain date, the Commissioner may not be able to provide an extension. Finally, I'll stress again, please be very careful of any potential breaches of integrity provisions. They are quite harsh provisions, and if they do apply, they can apply more broadly than just to the employer. So it can apply on joint several liability basis to other people, and a number of the other tests can apply in terms of misleading, deceptive conduct to other parties. So please be very mindful of that. Now, my very final comment I'm going to make, which isn't on the slide, is that these rules are moving very, very fast. They've come out quite quickly. HO are updating the information. We're expecting a legislative instrument any moment now to be issued, which might provide alternative tests. My key recommendation is this is very critical for you and your clients. You do need to understand where all this information is kept, and you do need to keep abreast of this information for your clients as it moves from period to period. It is quite critical to be on top of this as much as possible, but to also understand what things change over the period. At the end of this, all I can say, I wish everyone the best of luck in terms of applying these provisions. I hope that this session has been helpful. I hope that you're able to apply these for your clients in an appropriate manner, and that does help your clients survive through this very bad period. That's the end of my presentation. I might hand over to Andrew if he's still there.
Hi, Alexis. Thank you. Thank you. Just briefly for everyone before they you head off, a couple of key points from Alexis' presentation. Obviously, as you mentioned, we have done a recording of today, so we will distribute that. Claire has been sitting there busily recording it, so we will distribute that recording if you'd like to revisit it. So keep an eye out for that. That will hopefully come out tomorrow. Separately, we are hoping to do a separate session which we'll record and distribute to CPN members. I think one of our partners, Craig Watman, who's the head of our GST areas, who I think Alexis likely to do a more detailed deep dive into the GST calculation components of this. I think you've already had interest there, so we're going to do that and distribute that when it arrives. Other than that, if you could please, sorry, join me, thank you. Tremendous presentation from Alexis. Alexis, on behalf of all of us, thank you for giving up your last couple of hours. Thank you very much for doing that. I know you've put huge hours into this leading up to today, so thank you. And for everyone else out there, please keep safe, keep out of trouble, and you can all now go back to doing some chargeable hours. Again, thank you on behalf of all the Pitcher partners and the CPN for attending. Hopefully you got a lot out of it today, and that on behalf of us all, Alexis, thank you very much. Thanks all. Talk to you soon.